I think part of what's happening right now, and I think what's really interesting is that we're in a situation in which my interpretation of the world is almost 180 degrees from where Christopher Waller of the Richmond Fed is, right? So his articulation is because the Fed raised rates so fast and so hard that the data was all incorporated last year, that the impact of the rate hikes has already occurred in the economy. And therefore, what we're seeing now is the signs of the true underlying economy, which remains strong in the face of the rate hikes. My concern with that is that everything I see says the exact opposite. What we actually did is we took a system in which the majority of debt, people having lived through the experience of 2008, we got rid of adjustable rate mortgages. We moved to an environment in which people were increasingly focused on the idea of fixed rate debt, fixed exposure. A lot of companies, a lot of individuals, except for those in the companies, again, except for those in private equity, for example, or some of the well-known banks that are quite famous at this point, locked in their cost of financing at relatively low rates for periods ranging from anywhere from 5 to 30 years in the case of a 30-year mortgage. Now, nobody actually expects it to be 30 years. We'll come back to that in a second. But that's created conditions under which the hike in interest rates has been very slow to feed through. And individuals like Albert Edwards and others have highlighted that the underlying dynamics we're seeing is that net interest payments are actually falling for the corporate sector, for example. That's a function of when the Fed hiked rates this fast and this far, we're actually now seeing things like money market funds being able to offer people 5.5% interest rates, right? And so if you had a 2.75% mortgage and you have 5.5% coming out of your money market fund, this whole process feels fantastic at this point, right? Like you've got additional income. I personally am laughing, about the situation because I'm sitting here looking at a fairly significant quantity of cash that's been laying fallow, and suddenly it's, generating a lot of income,